How to shop interest rates. So rates are on the rise 2022. Everybody wants to get the best rate, and we want you to get the best rate too. So there's a couple of ways to make sure that you are getting the very best rate possible. So remember that in a 30-day period, any lender that you apply with and pulls your credit just counts as one pull. That's right. So you are definitely allowed to shop for a mortgage. There's compliance in place to make sure that you're protected. So your credit score will not take a nosedive. The second thing you need to remember is be prepared to make applications. So if you don't give a lender your full scope of information, your debt to income, your credit score, your job history is very important. The combination of your credit, or of your income, is it bonus, commission, are you hourly, are you salary? All of these things matter. So a full scope of your application needs to be known by the lender. It will make a difference in the program that they're able to offer you. So again, remember, any increase into your credit in 30 days just count as one. Now, once you apply, the next thing to remember is do all your applications, ahead of time. And then once you're under contract, you want to make sure that you shop for the rates on the same day. Rates change sometimes 2 to 4, sometimes 5 times a day. Usually it's not that volatile. Usually 1 or 2 changes in the day. So if you talk to a lender in the morning, their rate could be different in the afternoon. So what I suggest from personal experience, narrow down the lenders that you're going to be asking for this final rate quote once you're under contract, and narrow it down to the several that you want to deal with. And then right when you're about to be under contract, that's when you want to shop for the rate. The lenders can lock your interest rate in once you're under contract. So that's super important to know. The lock is tied to the property address, and we have to have a price and a close date in order to lock it in. Now, the next thing you want to know is that you've got to get the quote in writing. So one thing to be aware of and cautionary on when you're looking online is that, remember, the online lenders and advertisers, they make money off shock value. They want you to call them. They want to show you that they have a low rate. Many times that will probably include points. Points are upfront fees in order to buy the rate down. I've checked my Loan with Jen out. I've got some videos about that. But points are something to be aware of. In the tiny, tiny print online, it's probably there, but you might not know what you're looking for. So call whatever lender you're looking at and get it in writing. It's important to get it in writing. And remember, whatever the rate is today, if you're not under contract yet, it could change tomorrow, the next day, a week from now. So keep all of those things in mind when you're narrowing down lenders. So just to summarize, you want to narrow down the lenders that you want to deal with in the beginning. We suggest several months out, and then when the time comes, that's when on the same day you want to get their interest rates on the same day, and similar time of day is my suggestion, and finally get it in writing. I hope that this helps you. If you're in Texas, call us, loanwithjen.com. Talk to you soon.